Yeah, overall, I mean, it seems like we've come back from a big way from last year, which certainly you could say was a low base. But overall, what was your take of the year?
Tale of different quarters. Where the first 3 quarters we had quite significant double-digit growth, and then for the last quarter, a tougher quarter where we had more of a northbound travel from local Hong Kong residents into China. So a bit of headwinds there. But you also saw that we grew in our China market, online sales. We grew 74.5% in the second half of the year, which was very pleasing. And also in Southeast Asia, towards the end of the year, we started to see some growth. We've now got 5 stores in Singapore. And that is helping us generate growth into the first quarter of this year as well. But going back to last year, actually, as you mentioned, we went from an adjusted loss of $55 million to a profit this year of $218 million. So a big turnaround for us, and we're also very pleased that after a 4-year hiatus, we managed to pay out our dividend again. So we were always a high payout ratio company, and we're now back to 70%. Hope to continue that into the future.
Stores, of course, in Hong Kong, you are still trending below where you were pre-COVID. I think it's about 40 fewer than pre the pandemic. How are you planning to expand that network, or do you have plans to expand the network, given, as you said, you're seeing perhaps a pickup in online sales?
So if you look at our tourist mix right now, we're around 48% tourist mix in Hong Kong, Macau, and pre-COVID was 73%. So in terms of the 40 stores that you talked about, we actually keep tabs on where there are locations that we'd like to be in, but we're also monitoring the traffic coming into Hong Kong. So if you look at, as I say, the last quarter and into the first quarter of this year, it's almost 4x in terms of local Hong Kong residents moving into the Greater Bay Area versus Chinese consumers coming the other way. I think a couple of policy changes might help us. One would be the tax-free spend for Chinese tourists when they come to Hong Kong, which is about $5,000, and it's been like that for over 20 years. And also in terms of multiple entry visas, those kind of changes would really help us. And I think when those happen, we'll be looking at expanding our store footprint.
Can you tell us a bit more about that customer mix right now? I mean, mainland, tourists that are coming in, it seems like that's slowing from back in the good old days. But how much do they contribute to your overall Hong Kong sales now?
As I said, it's about 35% in Hong Kong, but it's about 80% in Macau. So mixed in combined, it's about 48. Actually, if you look at the spend per mainland per ticket per mainland visitor, it's almost double for a local Hong Kong resident. Obviously, as you know, when we're on holiday, we tend to spend more. So it is a big contributor. And I think, as I say, policy changes is one reason why that hasn't sort of recovered to where it was.
How concerned are you, aside from the fact that Chinese consumers aren't coming here as much, or mainland Chinese consumers, what about the northbound travel instead? Because especially when you've got the likes of Costco, for instance, that's setting up or is already set up over the border, how is that competitive landscape changing?
Yeah, it's quite different, but it's quite exciting as well. I think if you look long-term, it's a good thing that Hong Kong is now integrating into the Greater Bay Area more, and it's a good thing that consumers have choice. But it means that we have to be on our toes in terms of what we do. So we're actually looking at a lot more exciting promotions to excite our local Hong Kong residents. By October, we'll have a new VIP CRM system in place. We'll integrate our point system across the Greater Bay Area. So those kind of things we think will be positive for us. If you also look at our gross profit margin, which has been quite impressive for us, is that we grew that 1.5 percentage points to 45.5 this year. And what's behind that is that we're actually promoting a lot more exclusive brands. So our exclusive brand mix is around 36% at the moment, and that's moved up 3 percentage points this year as well. For those, if you look at our margins on exclusive brands, it's about 4x versus a apparel import or a big brand. And therefore, if we have exciting promotions on that front, if the sales mix increase will actually more than cover the gross margin loss on that. So I think there's more we can do, and there's a lot we can do, and I think we have those in plans for the second half of this year.
Yeah, I mean, I'm just wondering, in terms of when you expect things to recover in Hong Kong. I mean, I think in terms of your offline sales, Hong Kong, Macau is still less than half of what it was back in pre-COVID levels here. Do you think that sales will ever recover? Do you have a time frame at least, or is this sort of the new normal that SASA has to deal with now? Yeah,
I think 1 year ago when the borders first opened, we were worried about whether Chinese tourists would come at all and whether they'd spend at all. What we've seen now is they come and they spend, and the ticket size is actually very comparable to pre-COVID. What's different right now is the numbers. And I think while the China economy is the way it is, then that will drag on. But I think we always say that if we had 3 years, we'd probably get to about 67% of where we were in Hong Kong, Macau. But we're also looking to expand in Southeast Asia and in mainland China itself to make up the difference. So I think long term we're quite positive about what we want to do and where we want to go, but not necessarily it won't be the way it was.
Yeah.
Yeah.
Yeah, because it's also just changing preferences, and you mentioned niche brands, but how much more money can you make out of niche brands than ones that are more mainstream?
I think that's one big positive thing now is that both the mainland Chinese consumer and also local consumers, also in Southeast Asia, is that they're less obsessed about big brands, more willing to try niche brands. And that gives us a bit of room to play with. And I think we've always been a traditional retailer, but what we're trying to do more of now is move into the brand management piece. So in terms of that, we're looking at distribution channels in mainland China itself and also in Southeast Asia.
You mentioned about some of the changes on the border that could help, right? Multiple entry permits, increase in duty-free allowance. I mean, have you had discussions with the Hong Kong government? Are they willing to look at some of these changes or measures?
Yeah, I think we've been lobbying them quite frequently. I say not just us, but also the Hong Kong Retail Management Association over the past 6 months. I think that the hurt across retail in Hong Kong has been felt by everyone.
Yeah.
There are plans. There are plans to increase the 5,000 RMB to 30,000. But that's in discussion. And in terms of multiple entry visas, but these policies are not driven by the Hong Kong government, but more on the China side. So yeah, and it's our voices are loud and clear, and I think changes are ahead, but maybe not so immediate.
Of course, China, there's the currency impact as well, and we've been tracking the moves in the Chinese yuan heading to that 7.3 mark. But how is that impacting your business?
Well, again, likewise, for a Chinese consumer coming to Hong Kong, nowadays what we hear is that they tend to stay across the border in Shenzhen and travel in. One, to do with the cost here, and also to do the RMB. It's obviously weaker than it was. And just like Hong Kongers that during holidays nowadays tend to travel to Japan. I'm actually off to Japan tomorrow myself, but so currency does impact how much people spend while they're on holiday.
You mentioned about expanding overseas, Southeast Asia. What's driving that sort of expansion in Southeast Asia?
As I say, we're looking at how we can increase our footprint and how we can make up the gap to where we were.
What markets are you most excited about
there? We're looking at Indonesia, we're looking at Vietnam. I think the thing with Sasa is the brand is very strong. It's been around for 46 years. So we do have partners looking to cooperate with us, and I think that works well for us as well. So we don't necessarily need to set up stores immediately, but through a distribution network we can test the market. And again, with the niche brands that we have and the relationship we have brand owners, that's that again is something we can do that they can't necessarily do themselves.
You mentioned that dividend payout ratio of about 70%, plans to extend that, but just talk us through what led to you increasing it and how sustainable you think it is as well.
Yeah, not necessarily increased, but if you look at last year, we actually refrained from paying out a dividend even though our cash flow improved. So this year our cash flow outpaced our actual profit for the year, and that's through managing our inventory. So we're quite confident that going ahead we can maintain that kind of a policy. If you looked at pre-COVID, we actually had an even higher payout ratio, so we're quite confident we can kind of retain that.